Good evening, all. This is our case meet 25. Almost we are coming at our silver jubilee of case meets, and in this weekend, we are very fortunate that we are discussing about taxation and doctors. This month we have to submit our taxation also, and we got one of the best personalities from CA community, CA Mahesh Totla sir. He is a practicing chartered account from last 14 years in Nanded in the field of direct and indirect taxes and audits finance. Completed MCOM, Diploma Taxation Law, LLB and CA. And he has also completed post-qualification certificate courses of ICIA in concurrent audit of banks, cooperative societies and GST. And sir is at present chairman of Nanded branch of ICAI. Sir, welcome on our virtual platform. Please, sir, you can start your session now. Mahesh, sir, you can continue now. Hello. Hello. I think Mahesh sir is disconnected. Or Mahesh sir, are you audible?
He's there, but he's not answering.
Okay.
Dr. Sajjan, can you please call him?
Yes, I will call him. 1 moment.
Hello.
Yes, sir. You can continue now. Screen is
Hello,
yours.
everyone.
Yes,
Yeah.
yes.
Okay. So I'm sharing screen again, sir.
Yes, sir. Yes.
Please check. Yeah, is it visible, sir?
Yes, yes.
Fine. So good evening, everyone.
Good evening, sir. Good evening.
Yeah. So as you are aware that it's a common saying that dangers of self-medication. So one should not take medicine on its own. Like one should not plan its taxation, its tax compliance on its own. Right? So same way, the first principle of taxation we will like to discuss today, what is direct tax and what is indirect tax. Before starting this, I must be excuse me. Hello. Before starting this,
Yes,
I must inquire how many of you are filing your IT returns or heard about any taxation. Is there anybody who has never filed his return or not aware at all about taxation?
No, sir. No, nobody. No.
Everybody is filing.
Yes. Everybody is filing. Nothing no issue on that.
Then my job is quite simpler.
Yes.
Because then I have to discuss only the simple things which are you must be aware and rest of the things your consultant must be handling, right? So direct tax and indirect tax, there are two taxes, right? Direct tax is a tax which is directly collected from your pocket, and while paying, you are aware that tax is being collected from you. But while indirect taxes is a tax which is not, you are not aware, you are like you are going into market and you are buying anything, and so many taxes are collected from there, but you are not aware that you are paying tax, and that is indirect tax. So you are quite happy considering about indirect tax, because you don't know how much you have paid there, right? But direct tax is a tax directly affecting your cash flows and your pocket. So we are discussing today about direct tax, most of the part, and some of the part of indirect tax which is coming towards you with recent notification. So we will be going on that. The first thing in taxation, that is planning. Can there be a tax planning? What is tax planning? That there are several provisions of taxation, and using those provisions, can I reduce my liability? Can I reduce the quantum of payment of tax? And that is only the tax planning. If you are not planning your taxation correctly, you will be suffering by paying higher taxes of amount. And that's why tax planning is having a vital role. And in absence of complete knowledge of the provisions or expertise in that field, you may suffer paying higher taxes. And that is the reason in first slide itself, I have suggested that there should not be self-tax planning. Please get help of experts. Then why we are discussing tax today? If at all everything is to be done from that experts only, then why we are discussing taxes today? Because precaution is better than cure. The same thing is applicable here. If you do something or you transact something and later on it affects harshly, then it's better to understand some provisions, the basic knowledge of taxation, and then take advice of experts. That is the better. And that's why tax planning is there. So to understand how income tax is charged or how income tax is applicable, so it is applicable to an individual. Everybody is aware that you are practicing as a sole proprietor or alone, that is called an individual. Then what is HUF? Are you familiar with HUF? Sir, I must be happy to know the numbers, whether people are aware of HUF or not. You may write in comment box, or you may say if
Yes, sir.
anybody is not aware. Yes,
We know, sir. I know, sir.
everybody
I
is aware of
personally.
HUF.
Yes.
Then great. Then AOP, body of individuals, firm and company. I think most of you must be practicing in individual only, right?
Yes, sir.
Or very few in firm, because the nature sir said today that most of there are individuals and they are practicing. Nobody is here who is in employment and all, right?
Yes.
Fine. Then quite easy for me. Then next topic, how the income is charged. So there are only 5 heads of income, basically salary, house property, capital gains, PGBP, and other sources. If nobody is here is employee, then income from salary is not applicable to you. But in rest of 4 of the heads, there must be possibility that in one or other head or all the other rest of 4 heads, there can be nature of income you must be having, like income from house property. If you are having a house property and you are getting income like rental income, it is taxable in the head of income from house property. If you are running your business or profession, that is under that business profession, very simple as name suggests. Then what is capital gains? If you are having an asset and it is to be sold and get profit out of it, then there can be a short-term capital gain or long-term capital gain. What is short-term capital gain? If you are carrying that asset or holding that asset for more than 2 years, that is 24 months, then whatever you are earning, it's a long-term capital gain and it is to be taxed at the rate of 20%. But other than that, short-term, and in case of shares, that period is of 12 months. And apart from all these incomes which are listed, all the income are charged under other sources. So it's not like that farmer is exempt from tax. Everybody is aware that farmer, there is no income tax on agriculture. You have heard like that. But agriculturist as such is not exempt. Is only agriculture income is exempt. Why I am emphasizing like this? Because nowadays the nature of diversification has been started, and even doctors are having agriculture income. So many businesses apart from that doctor's practice, you are also having in different businesses. For example, some of you are having that petrol pumps, even in investment in schools, and so many different areas. So we will be discussing on that. As everybody is aware, you are filing your regular return of income, so basic exemption limit you are aware. But the new concept of discussion today is that new regime and old regime. So what is old regime and what is new regime? In last year, the option has been given that now there are two options to you. You can opt any one, but only the concern is once you have opted this option, you cannot go back again. You can avail this option only once. For other than salary income people, this option is once in a lifetime. You cannot every year, you cannot move from this option to that option. And that is only the concern. Which is beneficial, whether old regime to be followed or new regime is to be followed. The only thing is, if you don't have any sort of investments which are eligible in deductions, then only the new option is beneficial. Otherwise, the old tax rates are best. Though in comparison of slabs, it looks like very lucrative that new regime is very low tax liability slabs are there and it's better to go in new regime. But it's not like the case. Case to case, you have to compare your liability and accordingly you have to take the decision. Fortunately, this is not meant for you. Let it leave on your consultant. He will definitely decide which is better one for you. But only you should be aware. That's why I'm discussing what is old regime and new regime. So last year must have your consultant has been chosen that old or new according to your investment patterns. But this is not a thumb rule that old is better or new is better. It is depends on case to case in according to your investment pattern. Then the next thing is what is income tax exemption. Actually, the incomes which are not at all taxable, those incomes are called exempt incomes. Like, though it is told that agriculture income is exempt, but as far as you compare your computation, you can find there that some of the percentage of income is changed or shifted to the next slab, and some sort of component of taxation has been increased. So there is tax on agriculture. If at all only agriculture income is there, then no taxes. But the person having income other than agriculture income, then definitely there is tax on agriculture income. So please, while agriculture income, there are misconception that there cannot be any assessment of agriculture income. For your knowledge, I just want to share. Income tax department has shared in one of the case Google Earth photographs, and on Google, based on those photographs, they have added the income. Like you have never cultivated anything there. For 12 months, they took 12 photographs and they have added that agriculture income, whatever is shown in the return, is bogus income. And that's why only if at all you are having correct agriculture income, then only it is to be shown as agriculture income. Otherwise, that cannot be a means nowadays because of technology. So please mind it. If there is a huge, obviously, it based on component of size of that your agriculture income shown in return, but technology is there. Then what is there next? Like if you earn anything out of your partnership firm is already paying taxes there. So whatever share you are earning from your firm, that is exempt in your hand, but firm is definitely going to pay tax there. Then any income if you earn from life insurance company at the time of maturity or in case of death claims, obvious, it's not taxable. It's exempt in the hands of recipient. Then interest income from PPF, interest income from Sukanya scheme, These are some of the examples. These income are not at all taxable. So while deciding your investment patterns, where you want to invest, you can think of that tax effect. For example, if you are comparing that income of deposits, so you are planning whether I should deposit in FDR or whether I should deposit in PPF. So in case of PPF, if interest rate is less and comparatively you are thinking that interest rate in FDR is quite high, but the net tax effect of interest you have to compare, because if you are in 30% tax bracket and if you are earning 8%, so 2.4% you are already paying as taxes, then PPF is the better option since you are getting the interest income exempt there. So that's why it is important to know which income are exempt. Then you must have been heard that there is concept of deductions. What is the difference between exemptions and deductions? Exemptions means that income will not be at all part of your total income. So it will not at all be charged. But what are the deductions? Deductions means first this income will be added in your total income, and from that the amount will be deducted as allowable as deductions. Everybody must have heard the section 80C, the favorite section, because every alternate day insurance agents or that pygmy agents and all, they comes to you, which works with that post office, and they ask you for investments in this tax saving schemes. So life insurance premium is obviously a deductible item there, PPF deductible item, but the total limit for this deduction under 80C is 1.5 lakh. Everybody is aware. Along with that, there are certain different sections which also gives you deduction. Like 80D is health insurance premium. Then if at all you are pursuing your higher education and for that education loan is there, then interest component is deductible. If you give any donations, then deduction is there, but actually donation component is not for any kind of tax planning, because for getting 50% deduction you have to pay 100% for those donations, so it's not a planning material. But if at all you are paying somewhere and that institution is eligible and registered for the deductions, then definitely you can claim deduction from that. The next section is there, 80TTA, which is in respect of interest from saving bank accounts. So whatever you are earning, there is limitation of 10,000 rupees, but still deduction is there to promote savings in saving accounts. These are some of the sections which are mentioned here, but it's not that much discussable item here, because this is very common and you must be aware of that. The next thing we want to discuss here, that is housing loan, whether one should go for housing loan or not. Though you are having money with you, whether we should go for loan or not. So any sort of loan, not only housing, but housing has special 2-3 impacts. That's why I'm talking about especially housing loan here. One should understand, before I go further, one should understand what is the income and what is the liquidity. Sir, you are filing income tax returns for a number of years, and every year you have paid taxes. But whatever you have paid, the tax paid income, you are spending or investing somewhere. And after that, if at all the amount in form of cash balance or balance in your bank accounts, which you can easily use, that is called liquid fund, or liquidable or convertible investments like in short-term FDRs or short-term savings. Such sort of investment is called liquidity. If you don't have such amount in your financial statement, then though you are having money on income tax purpose, for income tax purpose, you are not having your own money. Why I am saying why this happens, that you are having cash in your hand but not as per financial statement in your hand? Because for the purpose of income tax, every family member is different, and every family member having separate PAN, they are having their own different income. But as we are living in a family, or generally the money is in common pool, and we do not keep separate cash books, at least at our home. And that's why I'm saying you must be aware while investing any amount, you must be aware how much in individual capacity you are having money with you while investing the amount. Then the point of housing loan, whether we should go for housing loan. If at all you are purchasing your first house, or you are having any ancestral house and now you are purchasing any house, housing loan is the best option you should opt. Because first thing, the rate of interest is the least one in the range of loans. So though you are having money, you are having opportunity to invest at higher return investments and get benefit of this lower rate of interest loan. First thing. Second thing, whatever interest you are paying, separate section is there to allow you around 2 lakh rupees deduction for the interest component. I am talking only about interest component. You can get 2 lakh, up to 2 lakh rupees deduction of that interest component. And whatever principal you are paying, means out of your EMI, the interest component can be deducted under section 24, that is different section. And the repayment of housing loan can be claimed as deduction in ATC. So dual benefit is there. Even interest deduction is there, and even payment of principal, you are getting deduction. And again, if you are having any sort of capital gain, then again you have benefit of investing this in house. We will be going in detail later on. So for housing loan, whether we should go for housing loan, yes, definitely. It's again, it's case to case, but mostly it is preferable in all the cases. So 2 lakh rupees interest deduction is there, and for repairs it is 30,000. If at all you are getting loan for that repair of house, still you can get deduction of 30,000 rupees. The next point. So one more thing, advance tax. What is advance tax? You must be aware every year you are paying, and for 4 quarters you must be paying. That slabs are there up to 15 June, 15% of your tax liability. If at all your total tax liability during the year is exceeding rupees 10,000, then you must pay advance tax. Otherwise, you must be facing interest component on your tax liability for the year. So there are 4 slabs. So I will not discuss in detail, but there are 4 slabs and you must go for that. Only the thing I want to discuss here, though there are only 4 slabs, like for the quarter ending, like June, September, December, and March. But if at all you don't want to affect your cash flows quarterly, then you can plan like if at all you are paying 24,000 per year. Last year you have paid 24,000. Definitely this time might be increasing your tax liability. You can work out, and you even can pay monthly. There is no at all any bar for payment of taxes advance other than these due dates. Like your SIP, you can start 2,000 per month paying income tax, no burden at all. Instead of paying this due dates, you can pay even monthly. Then one more concept is there, TDS. You might have heard TDS, and nowadays one more section is came. I will discuss that in detail. But what is TDS? Actually, the tax liability should be paid by the person who is earning the income. But unfortunately, people do not pay, and that's why Income Tax Department started one scheme, that is shifting responsibility of paying tax. Instead of the person who is earning, they have shifted this liability to deduct the tax, and at source from where he is earning the income, the tax is got deducted and it is paid to the government. So what happens to this tax? Like advance tax, you will be getting credit of this tax deducted. So it's no loss at all. And if at all somebody is deducting your tax, though there are tax slabs, but you may request to deduct higher side, no problem, because by deducting tax, you will save interest on your advance tax. If at all you missed your advance tax slabs, anyhow you didn't pay your advance tax, you may request the person who is deducting your tax to deduct higher. That will definitely save your interest. And that's why this can be a planning for reducing the liability. That's why I'm discussing here the TDS. So if at all somebody is deducting your TDS, please don't get unhappy, get it deducted. You will be definitely benefited. Fortunately, if at all the tax is deducted higher side and your liability is less, you will be getting your refund. And nowadays refund procedure has been very much simplified. You are getting directly credit in your account, no deductions in that, or no any sort of payments for that also. You will get directly in your account. The next point which I would like to discuss is section 194R. You might have read so many articles on it, or you might have heard about it. What is 194R? Actually, it is a tax on perquisites. Like TDS, they want to deduct they want to trace some sort of deductions on the benefits passed on, and either these sort of benefits are not recorded or not shown. And that's why they have came with this section 194R. Especially it affects like in case of you are getting free samples or any sort of target commissions. Actually, doctors don't have any target sort of thing, I guess, but it's there in wording that if at all some sort of target commissions are paid to any person in any kind, or like in sponsorship trips or in any other kind, then in such kind of things or items, the value is to be calculated, and how much is value is there, that benefit has been passed, 10% on that value deduction has to be done. Only the thing is that benefit, if at all, does not exceed 20,000 rupees, that is the cap. And once the 20,000 cap is exceeded, then 10% deduction is required. As you are being recipient in this section, so no worry at all. If at all some sort of benefit has been passed to you, then only this sort of deduction will be there, and that sort of TDS you can claim in your return. Only the thing is that amount, that 10% is deducted is the tax, but corresponding 100% of amount will be part of your income. That will be the only thing, that this sort of income, if at all till the date you are not getting this sort of trips amount, how much you only the trip has been given, but the value you have not judged, and now you have to value that much, and that will be your component of your income. That is the new section which will definitely affect, if at all this sort of on record, if at all any company is giving, definitely company will be planning something different, or some sort of thing will be definitely come there. But to grab this sort of transactions, this section is in picture. Then I would like to share some sort of concepts in case of income tax returns. As you are aware, every year you are filing your income tax return. Now they have changed this due dates, like 31st July is the due date, which is common due date. After that, earlier you will be you were able to file up to 2 years. You can now the system has been changed. The return for 31st July can be filed up to 31st March only, and that too with payment of late fees. If income is less than 5 lakh rupees, then only 1,000 rupees. And if income is more than 5 lakh rupees, you have to pay 5,000 rupees as late fees. And that interest and all that is there, but still that's why I want to highlight here that 31st July is the last date. And if your income is definitely it will be more than 5 lakhs, so there can be 5,000 rupees penalty that in sort of late fees. So don't miss this due date and file. The next section is audit, where whether the audit is applicable to doctors and on what turnover. Actually, there are two sections that can affect you. First, for being professional, if your gross receipts for the year exceeds 50 lakh rupees, then you have to audit your books of accounts. But as I have discussed, most of the participants today might not be having the limit of 50 lakh, they won't be crossing. So one more section is there, that whatever is your receipt, you must offer 50% income as your taxable income. 50% of receipt as your taxable income. That is presumptive section, and it is expected that doctor must be earning at least 50% margin. With 50% margin, practically they might go higher or less, but it is expected that you must be earning 50%. And if at all you don't want to offer 50%, or you are not having income of 50% of that much margin, then you can offer even less. But only the thing is, you have to get your books of accounts audited from a chartered accountant. That's it. That is only the concern. You may offer income less than the 50% margin. The next thing, assessment. First of all, I would like to discuss what is assessment. You must have heard assessment, that return whatever you have filed and income whatever you have offered to the department. Department from themselves assess your returns filed, and they issue notices whether they agree with your declared income, or they want some more details, or they add some income as your income and compute their liability and give you challans to pay. That thing is called assessment. Earlier, these assessments used to happen in local offices, and local income tax officers were doing this thing, that assessment part. Now the game has been changed, and the assessment is now become faceless assessment. Why I would like to discuss here faceless assessment? Because earlier you people were in connection with us. We were always in connection with department, and whatever sort of notices, we used to go there, we meet there, we were submitting some things, we were explaining them, and to the satisfaction of officer, whatever was required, we used to give them, and cases were closed. Now the system has been changed. Now the officer who is assessing your case is not aware for whom he is doing assessments, and unfortunately even we don't know which is the officer who is assessing my case. And that is very difficult thing, because now we have to explain. And even in certain genuine cases, in manual assessments, officer used to understand particular things or customary things, and he used to adjust some things or allow some things. But as the assessments are faceless, now the officers will not read between the lines. He will go by line and definitely follow the procedure as written in the law. And that is very difficult, because now there will not be any say. We have to follow the law, and we have to answer according to law only, and complete procedure is faceless. And that's why it's quite difficult. Like in case agreements, say some sort of agreements are there, and these agreements in Maharashtra, we use our local language, that is, if at all the agreements are in Marathi, and the officer asked that deed in English, and while translating, the translator changes some words, or the meaning has been changed during the translation, the officer may assess it differently, and there can be a huge impact. That is the concern. So preferably is, if possible, such transactions or such agreements which are having impact of tax liabilities, I will suggest here, please prepare those agreements in English itself, so that such translation issues may not appear in future. Then next, I would like to discuss one more point here: cash transactions. Like taxation provision or compliance provisions, you must be aware. But I want to highlight some sections of cash transactions which are applicable to you, and in day-to-day transaction, you must be aware about cash transactions. First thing, for any expenditure, if at all you are spending any amount, you should not pay more than 10,000 rupees in cash. That is, for single day, you should not pay to single vendor more than 10,000 rupees. That is the first thing. So it's better to pay all the amount by check only, because it ensures that expenditure has been already done. It increases more accessibility of those transactions. You get the trail from the bank itself. So it's better to pay in bank, via bank only. Then one more thing, that was for paying only, but one more new section was there for receipt of cash. I think today there are not surgeons involved here, so there may not be receipt of rupees 2 lakh or more from a single transaction. Might be there, but there can be agreements, and due to those agreement, you might be receiving 2 lakh or more. So there is new section that in single transaction you should not receive 2 lakh rupees in cash, or if a single agreement is there which values more than 2 lakh rupees, so even in part you should not receive amount in cash. And what is impact if at all you receive amount in cash? The whole amount which you receive in cash, equivalent penalty is there. So in short, income tax department will collect that amount, whatever component you are receiving in cash. Say for you are having any agreement with any hospital, and that hospital is paying you per month, say 30,000 rupees. So what is the amount? 3,60,000 rupees. If at all some sort of agreement is here, or in agreement amount is not written, but only the agreement has been given that per patient they will be paying you 3,000 rupees or 5,000 rupees. And due to that agreement, that for insisting that 5,000 rupees, the agreement is in picture. And because of that agreement, the whole amount is exceeding 2 lakh rupees per annum. And you are receiving the amount in cash. So whole amount in form of penalty you have to pay income tax department. And that's why be aware, for receiving such amount in cash, the provision is applicable. So either the separate transaction is there, you have to prove that every transaction was separate transaction and there was no such sort of agreement. And that's why cash transaction, even in receipt, this provision is important. Then again, one more provision for loans, taking loan and giving loan, hand loans. So throughout the year, there should not be exceed rupees 20,000 rupees. That is common section. You must be aware of that. But on record, I think nobody takes loan on record. If at all you are in need of loan on record, so I suggest every transaction should be routed through bank only, because for accepting amount in cash and paying amount in cash, there is penalty. So please avoid receiving and paying cash in form of loan, loan and repayment of loan. The next concept I would like to discuss is HUF. As I already asked, how many of you are aware of HUF? And as sir said, most of you are aware. Still, I want to repeat something. HUF is a privilege given to the Hindus. Why and why not to others? That I can't discuss. There might be logic that those who are having personal laws, other laws like Muslim law is there or other laws are there, they are not governed by this Hindu law, or rest of the people are governed by Hindu law only. Like Jains and Sikhs are also governed by Hindu law, and they are having this privilege of HUF. So what is HUF? The ideology behind is that earlier there was used to common pool income, like rental building is there and common family is receiving the income. Then who is liable to pay? That 4 brothers or 5 brothers, their children, and everybody is earning, that family is earning. Then who is responsible to pay? And that's why to identify someone is responsible, this concept of HUF came, and the Karta, the person who is the authority to run this family, that is called Karta, is liable to pay. Now, the only thing today I want to discuss is, most of the doctors or most of the professionals invest in shares. So I suggest you can have a demat account in the name of HUF, because in HUF you are not having any concrete income, if at all there. So it's better to have such sort of income there, because from last year, the concept of AIS, TIS has came, and the detailed transactions are appearing in your 26 years or that statements. And because of these mismatches, or because of these things, or your pending transactions or volume, because of your volume of transactions, your regular source of income returns are being delayed or pending to be filed, and there are so many complications. So I suggest to differentiate this individual and HUF, and better to have such sort of incomes in HUF. So if possible, you can have demat in HUF, and better to trade in HUF for that shares transactions especially. And the benefit of deductions, it's also applicable to HUF, so you can get benefit out of that. So please use HUF as best tax planning. It's very much legal, and you can plan your taxation accordingly to reduce your tax liability. As you are aware, if your income is less than 5 lakh rupees, no tax at all. It's like under bahar. So if at all less than 5 lakh, no tax. Above 5 lakh, directly tax slab is applicable, and tax is there. So if you are having other source of such sorts of incomes, and which increases your tax burden, so you can plan accordingly. HUF as a measure of tax planning. So keep in mind that HUF is there to save you. Then what are the sections which income tax department is stressing? As you are aware, due to technology, Digital India, department is trying to trace your every transaction. After that demonetization and all, banking has been increased, all these transactions are increased, but there are still so many sections. And I would like to highlight here which are those transactions. While doing, you must be aware that income tax department is watching. Like, if at all during the year, in small amounts in aggregate, you are depositing amount in your saving account, and that amount in aggregate exceeds 10 lakhs or 10 lakhs or exceed 10 lakhs, then it's the responsibility of bank to inform these details to income tax department. So if you have a saving account and the transaction is there, or such sort of volume is there, then definitely department will be throwing notices to you, and you have to reply that. Then if you deposit time deposits, that is FDRs and all, and more than 10 lakhs or more, then again it's responsibility of bank to inform department. If your credit card bill is 10 lakhs or more, so the credit card issuing bank or company will inform this to income tax department. Again, notice will be there. If you apply for shares or you purchase shares through demat account, and throughout the year that amount exceeds 10 lakh rupees, then again that responsibility of that company to income tax inform income tax department about these transactions. Again, notice will be there. If you purchase mutual fund more than 10 lakh rupees in a year, definitely this will also attract notices. One more thing is there. If you purchase or sell immovable property and the transaction amount is 30 lakhs, then it's the responsibility of registrar to inform income tax department. Unfortunately, this 30 lakh limit is if at all you are transacting jointly and by 4 partners or 5 partners, if at all the value exceeds 30 lakh rupees, the notice is being served to all 5 partners, because the transaction value is more than 30 lakhs per person. It is not just, and again notice will be there. So be aware, this sort of transactions are there. And for purchase or sale of immovable properties, please avoid cash transactions for both the transactions. As for sale, that 2 lakh provision is applicable. So whatever you are getting in cash form of thing, income tax department will ask for that. And if at all you are paying, say you are buying a plot, 5 lakh rupees is the registry value, and you have paid 4,50,000 in cash. 4,50,000 amount will not at all be considered to calculate your profit while you are selling that plot. If at all you are selling that plot for 5,50,000, the profit is only 50,000 rupees, but department will not consider that 4,50,000 rupees, and huge amount of component that is paid in cash will be considered as profit. So be aware of that. People, unfortunately, that copy paste format is there for that registry transactions, and there is written that मोबदला यापूर्वीच मिळालेला आहे, and they do not mention whether in cash or bank, and such sort of transactions are reported, and definitely you will be getting notice, and then you have to explain there whether that was by bank or how you are paid or received that sort of transaction. So that is the difficulty while doing this immovable property transaction. Please mention their complete details of payment and receipt, whether it is either it is post dated check or any sort of checks, but please mention there, so it will be very much clear whether it is in cash or by bank. It's not much horrible, but to discuss in short of time, what is income tax rate? As you are aware, every assessment is now faceless, so it's very less chance for department to interact personally. The only thing that remained, that interaction personally, that income tax department can come to at your business place or your premises for assessment, and that is only called raid. For that, huge sort of information and quantum should be there, then only department will be coming at your place. Otherwise, if at all you are compliant and paying taxes on time, there won't be any sort of raid. Then the big thing, the new thing, GST. The perception is there is no GST to doctors. Like the perception is there is no income tax to the farmers. People blindly says there is no GST to doctors. Actually, the GST has been implemented from 2017, and the provision is only services relevant in form of this medication process, or what you call in the capacity of doctor. That sort of services are only out of purview of GST. But if at all a doctor is a partner or doctor is having real estate transaction, then GST is applicable. If where GST is applicable and such sort of transaction is taken place by doctor, then GST was applicable. Now the new notification has been come, and if at all rental income from that patient per day is more than 5,000 rupees, then again GST is applicable. They are thinking like, if somebody is paying 5,000 rupees and more and getting such sort of facilities, so why not it should be compared with the hotels, luxurious hotels, and why should not GST is to be taxed, because he is already getting luxury there, and the people who are getting luxury paying 5,000 rupees per day, then they must pay taxes also, and that's why that this sort of thinking is there. But unfortunately, as your other services are exempt, then you won't be able to take ITC for this room sort of services tax, because there cannot be direct nexus, and it's a quite debatable issue. A lot of things would be coming there. So many representations definitely will be coming there, and I hope this provision will not be applicable, or if at all applicable, some sort of relief will be given, because indirectly, if at all tax is charged to doctors, there will be definitely burden in the field of medical. Yeah. The next thing, I have discussed so many provisions, as actually I requested for any specific topic, but I did not got any specific topic, so I discussed all those relevant provisions to you. Any question relevant to these topics, or apart from this, any concept you want to discuss, so forum is open for you, sir. Anybody there or everybody there? Hello? Hello, sir.
Sir, click on the stop share
Yeah, definitely. Hello. Sir, any questions?
Dr. Sachin, please unmute yourself. Your voice is not audible.
In chat box, I got one question, sir.
Yes, sir. So there is two questions in Q&A as well.
Okay. So I
From
can.
Dr. Amaya, can we get deduction under 80GG?
Let me answer the first question, whether that is there in chat box. Can check transaction be replaced by UPI? Yeah, definitely, sir. Because UPI payment is from bank account only, so very well you can use that UPI payments. That can be replaced. Yeah. Then next question, 80GG. Regarding that rent and all, you must be asking regarding that. Yes, there are certain conditions. If you comply with those, definitely you will get that deduction. So what is next question? Hospital loan, should we take? Yes, ma'am, definitely. Why? Because if at all you compare nowadays, the rate of interest for any sort of commercial loans is also reduced. It's less than 9. And for doctors, bankers are eager to give you loans, ma'am. So definitely that interest component you can claim as expenditure for over the years you are paying your loan. And if it at all you are having free money, that can be invested in high return paying investment. So definitely you should go for that loan. How the tax calculated on fixed deposits? There is no tax on fixed deposit as such. The interest, whatever you earn, so though your term is for say 5 years or 10 years, the interest every year you earn is taxable. And every year you can get the certificate from bank how much interest you have earned on that particular deposit for that particular year. And that yearly the taxation is there on that interest income. Again, for that interest income, one more thing is there, that there are two methods of accounting, that cash system and mercantile system. So that option, what I was telling, that is in mercantile system. And if at all you are following cash system, then in the year of receipt, that tax is that FDR interest is taxed. The next question is, I am a general practitioner in Mumbai. Since I am dispensing medications, am I supposed to have a GST number? Sir, there are two things in GST. First, there is a section called composite supply and mixed supply. So when you are giving services and also supplying product, so there is composition of services and goods. But for what purpose people are coming to you? Which is principal supply? for medication, if at all they are coming and including that sort of thing is given, then your primary service or principal service is medication and which is exempt, then no problem at all. But if you are running medical kind of thing and separately one can buy from you only that medicine, then you are selling those medicine and pricing is separate, then GST is applicable. Is it clear? Because this is some complicated sort of thing is there. That's why I'm asking. If it is clear, then okay. Otherwise, I can explain in details. Sir, you may allow them to unmute. No issue at all. One more question was there. Can NR, I hope it is NRI. Is it NRI, sir? It is written NRE. NRI can form HEF. Sir, unmute yourself. Sir, you are not audible. Let me discuss considering is as NRI. If NRI is there, the income tax is chargeable based on residential status. Whether you are resident in India or whether you are not resident in India, accordingly, incomes are taxable. And so very much NRI also can form HEF, but that residential status test will definitely applicable to that also. Sir, residential status is in play in case of NRIs. Residential status means, in short, I would like to explain that residential status means for how many days NRI were in India, and accordingly that residential status is decided. I receive check payment from my parents every month for home loan payment as it is in my name. Will that be counted as an income for me? Sir, two things are there. First, that you are receiving amount from your parents and for paying loan only as it is in your name. Sir, if the home is in name of parents only, and due to it's a bank's policy or trend to make young persons as a co-borrower, and if at all you are co-borrower there, and that's why payment is routed through your account, there is no question of income at all. Then again, if at all this is not the case, loan is in your name only and still parents are giving you, then how you are treating in your financial statement? First thing, if you are showing as receipts and in form of loan you are standing the amount that in future you will be paying again to your parents, then it will stand as a loan, then no question of income is there. If you are showing it's a non-repayable amount, that every time they're giving amount to you and you are showing like income, still it is not taxable as it is from your parents. So no question of taxation is there. But treatment in financial statement, that is to be presented in correct form. Can my mother gift or loan 25 lakh rupees money by check to my HEF? loan or gift? What is better here? Sir, in case of HUF, any amount received from members of HUF is only exempt. Unfortunately, our parents are not members of our HUF. In your HUF, you, your spouse, and your children are the members of HUF. So whatever you are getting from either your parents or parents of your spouse, those are not members of your HUF. So income from these member, gift from these member in sort of to HUF will be taxable. Amount exceeding 50,000 rupees will be taxable. So don't take as a gift from them, take loan from them. Loan is the better option in case of HUFs. And whenever you are taking either loan or gift, please ensure from whom you are taking loan or gift, he must be having in his financial income that much liquidity. Otherwise, he will be in trouble because of this sort of transaction. I think in chat box, there is no question. One more question. What will happen to loan to HUF after the person giving loan is no more? What provision can she make? Sir, in case of loans or any amount standing to the financial transactions and the person is no more, then the question of succession arises, and whatever treatment is given to that succession transaction will be applicable here. So whoever be the successor, that name will be replaced by that mother's name will be replaced by that successor's name. And in case of deaths, actually, the will plays a lot of role. So we always suggest it's better to have will. In case of she want to gift, if at all she wants to gift, so instead of HUF, she can gift in individual. Better to gift to individual. By gifting individual, no taxation will be there. And in your HUF, that loan will be stand as a loan from individual, if at all succession is there. I think in question answers, no more question is there, sir. Right? Sir, you are not audible. One question remained there, that question relates to capital gain. If I sell commercial property and invest in residential property, is there exemption is there? Sir, 54 section is there, 54F is there. And whenever capital transaction is there, there are certain conditions. By following them, you can get deduction, but amount restriction is there, and that number of houses or that conditions are in place. So it depends on case to case. In detail, that case details are to be provided, but definitely investing in house can give you benefit. But in your case, that number of house case, that transaction is to be checked. That's it. Section 54 is there. 54, 54F are there. Sir, can we stop recording? Sir, you are not audible actually. I'm not getting you. Sachin sir, you are not audible, sir. Actually, you are not audible. That's why. I think questions are over here.